Hello, I'm Martin Smith and this is your UFX Markets Week in Review. Today we'll cover some of the major events of the past week and discuss how they impact the global currency markets. The euro increased against the dollar as European leaders arrived at an agreement easing concerns that banks will fail, and optimism increased that they are closer to resolving the region's sovereign debt crisis. Last Friday, leaders of the Eurozone completed their 19th summit to discuss measures to stem the debt crisis that's seen 5 euro members seeking international bailouts. The US dollar declined against all of its major counterparts after EU officials met during a 2-day summit in Brussels and dropped requirements that governments get preferred creditor status on crisis loans to Spanish lenders. Leaders of the Eurozone agreed that banks can be recapitalized directly by bailout funds rather than having them channeled through governments. They also dropped a requirement that emergency loans to Spanish leaders get preferred credit status, as reported by European Union President Herman Van Rompuy. It's speculated that the European Central Bank will lower its benchmark lending rate when it meets next. The euro was last trading at the rate of 126.63, an increase of 1.77%. Higher yielding currencies climbed, as well as stocks and commodities, on increased risk appetite in the markets. The Canadian dollar increased against the greenback on optimism that Europe is getting closer to resolving its debt crisis. The currency showed its biggest advance since November last week after European leaders agreed to ease up on conditions for emergency loans to Spanish banks. Canadian Prime Minister Jim Flaherty said that he will tighten mortgage terms as the country's attempts to stem a household debt crisis. The Canadian dollar was last trading at the rate of 101.63, which is a decrease of minus 1.60%. The Australian dollar rose after European leaders announced plans to support funding for Spain, reducing demand for safe assets. The Australian dollar was last seen trading at the rate of 102.36, an increase of 1.93%. Crude oil increased the most in more than 3 years on optimism that the European debt crisis may be contained, bringing a return of risk appetite to the market. The increase in the euro is reinforcing the appeal of commodities to investors. European Union sanctions on Iran will start in full force after exemptions on some contracts and insurance ended. This is boosting crude oil prices and increasing pressure on Iran to halt its nuclear enrichment program. Oil was last seen trading at the rate of $84.96 a barrel, which is an increase of 9.36%. Gold traders are bullish for a 6th week on speculation that the ongoing European debt crisis will boost demand for the precious metal. Gold closed at $1,597.33 an ounce, an increase of 2.90%. Well, that's all we have time for today. I hope you've enjoyed this week's review and you'll join us next week. Until then, be sure to visit us at ufxmarkets.com for all of your online trading needs. For UFX Markets, I'm Martin Smith. Good luck and happy trading.